Let's bring in Jeff Kilburg. He's KKM Financial's founder and CEO and a CNBC contributor. Jeff, it's great to see you again. Welcome.
Kelly, on behalf of the middle of the country, it's great to see you back. Welcome back.
Thank you. Do you want to pick up on anything you just heard before we dive into the Bitcoin layer here?
Well, I think it's interesting talking more about international, but I think international has played a part in a portfolio, but I really see the broadening of the S&P 500 equity market outside of the Mag 7, the rotation inside Mag 7. I think that's going to be the more of the major theme going forward as we see interest rates move down. So I'm optimistic on equities. I think we see the Santa Claus rally here in the month of December. So I am optimistic, but I think there's going to be more broadening. It's not going to be the usual suspects per usual.
Okay, so is that why you're worried about Bitcoin possibly taking another leg lower here? And again, you're someone who owns it and I think is long-term bullish. If correct me if I'm wrong.
Correct.
Describe what you think is going on here.
I think saying equities and crypto in the same sentence is not 2025, nor it's going to be 2026. We saw decoupling. That lack of correlation happened back in April when we saw the NASDAQ 100 and crypto, specifically Bitcoin, really decouple from each other. So I am cautiously optimistic, but I didn't like the fact that we didn't see this pullback, which is completely healthy. Let's remember, Kelly, I go back to 2017. That's when the CME Group started trading Bitcoin futures. So if you look from 2017 until now, there's been about 20 different pullbacks of 25% or more. We just endured a 30% pullback. We've actually seen 3 pullbacks of 50% or more since the futures started trading. So I don't think this is unusual. The acute volatility is sensational, but I think the fact that we didn't go back and fill down to that April low of 76,000, that's where I think the market wants to go. But at the end of the day, Kelly, there's so many new organic buyers. Look what Vanguard just did. They opened up the faucet to many more buyers. JP Morgan, there's a lot of new players and products in the accessibility. Look at IBIT. IBIT has had $32 billion in inflows just in this year. So these new buyers, it's very different than the stock market. If you think about it, Kelly, on a stock, there's a sell analyst, there's a buyer analyst, there's always different ratings. Not really in crypto. If you don't like crypto, you just don't participate. So it's a kind of a different animal.
Yeah, I saw Larry Fink saying today that, the more he traveled the country and talked to people, the more he saw the use case for crypto. I would say I understand the use case outside of the U.S., but I almost feel like the more that I talk to people, the less convicted I am that Bitcoin should have any fundamental price value. It's kind of just a community thing, you described.
And that's the head scratcher. So when you saw it up at 125,000, you were getting in Uber rides and you were talking about buying crypto. So that is that kind of moment in time. And now the people who just bought there and have seen a 30% drawdown, are they going to take that tax loss harvest before the end of the year? Are they going to have the appetite moving forward? But I do know a lot of the advisors I support, they're trying to really understand what is that crypto exposure, not just necessarily Bitcoin, but what is that crypto exposure moving forward? Is it 1%, 2%? It's kind of like when people are dipping their toes into commodities. Look at gold and silver. Obviously, a completely different
I was just going to ask you.
That's the more tangible component, and that's where we talk to a lot of our folks. We've owned gold, we've owned silver. It's been very tactical, but this is a conversation which is very different than Bitcoin, which I know is the new modern-day version of gold.
Well, to those who like it. I guess the final then, for 2026, it sounds like you're saying, Santa Claus rally, market broadening, doesn't necessarily mean crypto participates. What's the rest of the narrative for you, the sort of the 30,000-foot story?
I think the 30,000-foot story is that interest rates are coming down. Immaterial, yes. I'm actually going to be out visiting with you on set next week for Fed Day. So, yes, we are anticipating the Fed to have 25 bips. But moving forward, rates are coming down. If you look at the 2-year note, that's kind of the precursor, the predicting component of where the Feds should be. And I think the overarching theme of interest rates coming down, that's going to be supportive of equities. We haven't seen the 10-year really spend much time under 4%. So if we get down to 3.5%, Kelly, that's going to incentivize, it's going to help home buyers. I think it helps a lot of the laggards in the market. I think it helps the financial. I think it helps all the sectors that we've been talking about that have been dispersed from, obviously, technology and utilities. That's where we see it. But it's interest rates, interest rates, interest rates.